So this video is going to be a keeper. We're going to be going over exactly how to select the best bank and bank accounts for you to do business with. This is going to have value for anybody on their financial journey because the banking system is at the heart of all of our financial journeys. And I want to be very, very clear. This is not going to be structured around promoting big commercial banks that everybody can access or fancy online accounts that have specific promotions. This video is going to be tailored to you specifically, knowing exactly what questions to ask yourself, what guidelines to follow to select the best bank and bank accounts, specifically personal accounts. The intent for this is because I am a banker and a financial services professional, and I am telling you firsthand, there's hundreds, thousands, even tens of thousands of dollars, sometimes yearly, to be saved and made based on your banking relationships. And this makes this a very important topic in people's financial lives. And that's why we're going to cover it in this video. This is JP from Blueprint for Prosperity. We're going to dive right in. So we got 6 topics on the table. 6 topics on the table, not 3. We got 6 topics on the table I'm going to cover. These are going to be structured out into questions you need to ask yourself and just general guidelines to focus on when making a selection. It does not matter if this is your first bank account or if you've been banking for decades and you're just switching banks and you need to put a fresh frame of reference, especially if you've been banking for decades, because the way banking was done 10, 15, 20, 30 years ago has changed significantly. So this content is very prevalent for you as well. So the first thing you need to consider, the first guideline / question, is proximity and preference. Proximity being your geographical location, what banks and institutions are around you. And more importantly, or just as important, what are your preferences? Do you prefer in-person banking, or are you one of these people who prefer online banking? Are you proficient online and you prefer to get the majority of your banking done online? Your, deposit accounts, if you need lending solutions, so on and so forth. Are you the kind of person that's a bit of a techie that doesn't mind navigating that whole process online and maybe having to pick up the phone or chat here and there? Or you, like most people, and you prefer to be able to walk in and see a person face to face and interact with their bankers and lenders and so on and so forth in person? You need to know that when you're making your selection, probably first, what's around you, and based on proximity, also preference. Do you prefer in-person banking, or do you prefer online banking, or a blend of the two? And between those two, getting those two sorted out, that's going to help a lot narrow down where you can do your banking. The next thing you're going to want to consider, your cash flow and cash reserves. The vast majority of bank accounts are gauged by how much money is flowing in them and how much money is kept in them. Meaning, if you're looking to avoid service fees or get access to additional banking features, benefits, and perks, free checks, interest-bearing benefits on checking accounts, ATM fees waived. The list goes on and it goes all the way up the ladder. Bank accounts get pretty sophisticated when it comes to additional perks and benefits if you have a strong enough relationship. And they're going to be looking to determine the value of that relationship by how much money goes in the account, the way that money goes in the account, and how much you keep in the account. Do you have direct deposit? Are you going to be keeping $500, $1,000, $1,500, $2,000 in the account after you're spending? Are you going to have $5,000, $6,000, $10,000 put to the side in a savings account tied to your checking account? These are the type of things you need to know in advance, because every single banking institution will have individualized requirements. Credit unions, small banks, regional banks, and commercial banks are going to all have their own, metrics of what's considered a valuable banking relationship based on deposits and inflows. The next thing, what bills do you have? How do you pay those bills? So this is powerful as well, because every single bank account and bank has different infrastructure. Some banks are still relatively antiquated, where you're going to have to maybe get a debit card and a really basic online profile, but transferring money in and out, external transfers, Zelles, online banking, all of these things may not be available at some of these banks. Now, mind you, the flip side of those institutions is they have great rates a lot of times and great personalized service. So they're not completely useless. But if you're somebody who's used to automating all their bills and, being able to do everything through Zelle, peer-to-peer transfers, if you're that kind of person, you have to be very careful who you bank with, because many small local banks and credit unions don't have that infrastructure. So you may be in a proximity, in a location that you're surrounded by banks that don't have that infrastructure, and there may only be a couple regional or commercial options available, and that narrows your business pool down significantly on who you're going to set your personal banking relationship up with. Next thing, that segues us into debit or credit card use. We're going to tie that into the last point I made, the third point on bill pay, because I, as a banker, a financial services professional, and just a finance enthusiast, always recommend that you max out your use and optimize credit cards. But many people out there don't feel comfortable with them for various personal reasons, and that's okay. The reason this is relevant in this video and relevant to that third topic on how you pay your bills and what bills you have is because you can get a bunch of rewards points if you use your credit cards effectively, get zero liability protection, fraud protection, and additional perks and benefits on your credit card using it to pay your bills and everyday expenses versus a debit card. When you have a debit card, they're not going to be as easy on protecting you against fraud. They're not going to step in and be able to protect you the same on purchase protections. It's not the same commonly on debit cards because that's your money and the bank is just facilitating that transaction. It's not their money. Credit cards are different. They got skin in the game. It's their money. So they're going to back their consumers in those scenarios. Now, that having been said, how does this tie back to you picking a bank account? Well, what happens is if you need to pick a bank, if you are going to maximize credit card use, that has decent credit cards. That is not common for every institution. Credit cards are usually going to be more favorable with regional and more larger commercial banks on average, but you can find some hidden gems in these local small banks and credit unions. But it's very important to do that legwork in advance if you plan on adding credit cards to your bank relationship banking strategy. Very important. The next point number 4, is this going to be your sole bank or part of a bigger banking setup? So basically what I'm saying is, this bank going to need to be your do-all, catch-all? Is it going to need to be able to do everything and juggle all of the needs you have? Or is it just going to be a additional bank that provides specific features in your overall banking relationship setup? So are you going to have a big, large bank for your, money movement infrastructure? You're going to have another bank for, your credit card setup and lending needs. You're going to have another one to hold your heavy deposits in because they have great rates. Are you going to be that person? Are you that person that's like, look, I just need one solid bank that's going to help me pay my bills, help me receive my direct deposit, and maybe help me with a couple of lending needs. I want to get a home one day. I want to get a car auto loan in the near future. And that's it. You need to understand that when you go out there. You need to understand what this banking relationship needs to do for you, because if you go to an institution and you're looking to just get everything done under one roof and you go to the wrong bank, they won't be able to help you with everything. You'll be in either set up and an institution and handcuffed yourself or gave yourself some future work to do by having to move that relationship, or you're going to end up wasting a lot of time or a reasonable amount of time shopping with that institution or doing all that with that institution and finding out that they can't provide what you need when you could have found that out sooner, either online or stopping in and having a quick conversation with one of the bankers. So know what that bank's purpose is. Be intentional. Next feature, can you grow with this institution? Do you see yourself having different needs 2, 4, 5, 6 years down the line? Is this a type of institution that's going to provide for those needs at that time? Very important. Why? Because it becomes a headache to set all that stuff up with a bank, and then 2 years later you outgrow them, or 3 years later you outgrow them. It takes time to move over those transactions, time to reset that infrastructure up, time to reset up your online banking, infrastructure. All those different things takes time, effort, and energy. If you can minimize that by looking at the long-term projections or even intermediate-term projections of this bank, where they're going to be infrastructure-wise, how are they doing on rates? What do they look like on service? All of this is important when you're shopping. Again, to minimize that turnover. You want to be able to have a long-term relationship with the banks that you choose. You really do. Works out better for your banking relationships, much better value add in that partnership between you and the bank, less headache for you. Next, final topic, follow the money. Once you've answered all of these questions, now at this point in time, you should be looking for promotions. Who's gonna offer the best incentives for you to bring your business there? You've already done all your homework and narrowed down to these handful of institutions that check your boxes. So now who has that checking account promotion, new money savings account promotion, CD special? Who has lending specials if you're going to jump right into credit cards or auto loans or home loans in the near future when you set up those relationships? Once you've done all the legwork on the first 5 major questions or guidelines I just laid out, find the best promotions, because there's a ton of money in churning bank accounts. Basically meaning that, you can take your money and establish a bank account with an established institution that's gonna serve you the best at that time. And then once you get your foot in the door with them, you can take some of that money and maybe find another institution that also still checks a lot of these boxes and can offer you new money promotions or new relationship promotions. And believe it or not, you can make some pretty good side money on an annual basis with this strategy without stretching yourself too thin. Just find a few good solid institutions if you need them and move that money around and get that extra money. So these are 6 major parameters, guidelines, questions that you need to have set up no matter if it's your first or your 50th bank account. You need to go through this and make sure that you have them all checked off properly so you don't waste any time and you get maximum value out of your relationship banking. As always, I appreciate y'all tuning in. I enjoy bringing you this content. Comment down below. Let me know exactly where you are with your banking relationships. Is this going to be your first go around, or is this your, have you been banking for years and this is going to be a new strategy for you to get more out of your banking relationship? And comment down below and let me know which one of these 6 hit home the most that you hadn't thought about or that you've had experience with and wish you would have thought about in the past. As always, to all my pioneers out there, I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.